Right now, a massive $50 trillion financial engine dictates the global economy. It controls the wealth of billionaires, influences the price of your smartphones, and changes your local currency rates. This is the United States stock market. Think about it. Every time you buy an Apple product, watch Netflix, or search on Google, you are feeding American giants. But how do ordinary people from anywhere in the world turn these daily habits into ownership? Today, we are stripping away the confusing Wall Street jargon. By the end of this video, you will understand exactly how the US stock market operates, what actually drives prices up or down, and how global investors participate in it. Let's break it down. To understand Wall Street, forget the massive skyscrapers for a second. Imagine a local business, let's say a high-tech lemonade stand run by Alex. Alex wants to expand nationwide but needs $100 to do it. Instead of borrowing from a bank, Alex divides his company into 10,000 equal pieces. Each piece is a share or a stock. If you buy one piece for $10, you officially own a tiny percentage of Alex's business. When a company does this for the very first time on a public level, it's called an IPO, an initial public offering. Once public, those shares need a secure place to be bought and sold daily. That digital marketplace is called stock market. These shares are bought and sold on two massive, centralized platforms called stock exchanges. The first is New York Stock Exchange, the oldest physical exchange where iconic companies trade. The second is the NASDAQ, a completely digital network famous for tech giants. The main trading floor operates strictly Monday through Friday from 9 a.m. to 4 p.m. Eastern Time. To check if the market is doing well, investors look at the indices. The S&P 500 act as primary health check, tracking the 500 largest US companies simultaneously. But what makes stock prices move up and down every second? It comes down to a simple economic rule: supply and demand. If a company reports massive profits, millions of people want to buy its stock. High demand pushes the price up. If a bad news breaks, people panic and sell, causing the price to drop. You can't just walk into the New York Stock Exchange to buy a stock. You need a middleman called a broker. Modern digital brokerage allow you to instantly connect to the US market right from your phone, matching your buy order with someone else's sell order in a millisecond. That is the mechanical engine behind the US stock market. Companies issue shares, exchanges host them, and supply and demand dictate the price through your broker app.